Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Angela Sloan. She's CEO and founder of Sloan Financial Group. Angela, welcome back to Traders Nation. How are you today?
Oh, wonderful. How are you?
I'm doing great, thanks. Hey, listen, you know, Tax Cuts, Job Act of 2017 was awesome for many, but when it comes to tax time and filing, are we going to be running into complex issues, Angela?
Yeah, I'm afraid it's not quite as simple as it was made out to be.
Oh.
Actually, myself and my staff was in training 2 weeks ago. We had a full week of training.
Yeah.
So the IRS has done the usual IRS thing. They've added 22,000 pages to the tax code in order to make it simple.
Good Lord. Good Lord. You know, I had Steve Forbes on, and it was like filing. The topic at the time was filing our tax return on a postcard. And I think we're going the wrong way, aren't we, Angela?
Well, they took part of the 1040 and put it on a postcard, and it has 8 schedules that go with it. So,
good grief! Good grief!
So they took the 2-page form and turned it into 8.
So yeah. So now now we have to buy tape to tape all these postcards together so they can get all the postcards in one lump sum. Isn't that that's the government working for us, right?
Yeah, but here's where a lot of confusion is going to come in.
Right.
And when we went to this training, one of the first things that we were told was you're going to have to evaluate your cost of doing business because it just went up. For reasons I just stated.
Okay.
The use of paper, the use of toner, the use of your time is going to be very time-consuming for us.
Okay.
And we were told first tax season's probably not going to start on time.
Oh.
They're just not going to be ready.
Okay.
They're going to be making changes to forms all throughout tax season. So the forms are nowhere near ready yet. And they said you need to make sure your clients understand that they will probably need an amendment. The earlier they file, the more likely they are to need an amendment.
Okay. Because
there are going to be changes being made throughout tax season. So they need to understand that up front because if they come back with a letter from the IRS, they're going to expect you to amend that return for free, and you just can't do it.
Right, right.
So we're trying to figure out how we're going to handle the administrative stuff, from our end to make sure they understand that this, and this is probably going to happen.
Yeah.
And it's not our fault.
It almost sounds like the dust hasn't settled yet over there at the IRS.
Oh, heavens no.
and seriously, they should be working on these forms 24/7, right, until they get them done. It just doesn't make sense to me that they're going to go into a tax season and not have their forms that everybody needs to work with not done yet. That's crazy stuff for me, but I guess that's the government. I don't know. Earlier
they have to have it so they can read it, right?
Yeah, so be prepared to file an extension because we just simply don't have our forms done yet. That's crazy. You and I would be out of business if we ran our business that way, wouldn't it?
Oh my goodness! If I ran my business the way the government runs theirs, I'd be in jail.
That's right.
I'd be. What would happen if I printed money?
Yeah, we would all be in jail. We would all be in jail, right?
That's right.
Yeah, we wouldn't be here talking on the air. We'd be in jail, wondering, hey, they did it. Why couldn't I? All right, so let's talk about some examples. Certainly, old versus new. There's going to be some new deduction allowances, and some are going to be going away. For instance, like the state and local tax deductions, sales tax, property. On the personal side, and I want to get to the business side, but this on the personal side. So certainly, they've got now a limit to where you can. The old used to be you could deduct your state, local sales, property taxes, things of that nature. But now there's a ceiling on that. It's like $10,000, and certainly you get into states like California, in New York, Maryland, maybe even Chicago. Yeah, there's going to be $10,000. It's like, well, wait a minute, that's what my monthly property tax is in some of these areas. How are they going to deal with that?
Well, they're going to be limited. Either they can move or they're going to be limited. And in our area, that's really not going to affect very many people at all in our area.
Right.
But when you get to certain areas, it's going to affect probably almost everybody.
Sure.
So, like I said, the option is to move or deal with it. It's just the way it is.
Go to Florida. right?
Yeah.
Move to Florida. It's easier on taxation down there. So yeah, I think you're absolutely right. And again, there's states that are really heavy hit. I mean, I'm talking. Well, there's one instance the other day where I saw a house in California was condemned. It had a fence around it, sold for nearly $1 million. I mean, really, good grief.
And what was the property tax on that?
Right, through the roof, I'd imagine, and only going to get worse too, because California has, every time a house gets sold, property gets sold, it's now at that new level. So there's no grandfather, there's no legacy amount. Every time it gets sold, it's recalculated at that sale amount. Very, very bad, and it hurts. Right. California's, hurts people, but California's benefiting from it tremendously. Let's go to the business side. Who's on the business side? Is there going to be any upside to businesses with this tax plan?
Oh yeah. The pass-through entities like your S corps, partnerships, those types entities, they're going to have a new credit. It's called a 199A credit, and there's got to be 100 ways to calculate the credit depending on the business. We spent 2 full days just on that one credit.
Is that right?
It's going to pass through to their personal taxes. The whole purpose of that extra credit is to encourage these businesses to reinvest in their business and hire more people. It's to get the business booming.
Sure.
Is what that whole thing is leading you to. So it kind of goes down to a funnel, and that's where the funnel winds up. Oh, I get it. You want me to expand my business and hire more people.
Sure.
So yeah, that's the crux of that. So that's for pass-through entities. For a C corporation, which is not a pass-through entity, the corporate tax rate has been cut.
Okay.
So the corporate tax rate does look better. So yes, it's definitely going to be good for businesses. There also the equipment and bonus depreciation.
Right.
The full cost of certain equipment placed in service after 2017 can be taken.
Nice.
So that's going to be a help. And
those are great incentives. I mean, those are incentives for business. Those are incentives that businesses want. I want to grow my business, and by growing my business, I'm going to need equipment. I'm going to need to hire people. I mean, I'm liking that. I'm liking that.
The one thing that happened that I sort of kind of agree with in a way, because I can see where there's been a lot of abuse, is that they've taken away the deduction for entertainment expense.
Oh.
They specifically mentioned ball game tickets.
I wonder why. I wonder why. That must be popular. I'm sure they have a chart or a matrix on that. So
sure. You have corporations that bought licensed seats and deducted it because they give their tickets to whomever,
sure,
as a business expense. So they've really cut back on the entertainment. Now, you can still do the meals. You still get 50% of business-related meals.
Right.
But they did do away with the entertainment.
Well, take that entertainment dollars, put it to the equipment, right? Put it to the equipment. So you're right.
Again, you can see where they're funneling this for people to buy equipment and hire people.
That's exactly right. We're almost out of time. In fact, probably about 30 seconds. Any downsides to business? I mean, we talked about time, maybe some confusion. Certainly going to be some accounting questions are going to come up. Are those what we're looking at for the downside for businesses?
For the downside?
Yeah.
It's mostly pretty positive for businesses. Like I said, they decrease the corporate tax rate.
Sure. So we're out of time, but so there's a little bit of downside, but mostly big side. Would you agree?
Yes.
Awesome.
Yes.
All right.
People ask me, is it going to hurt me or help me? I say yes.
Of course it is. Angela, where can we find you? Got a website?
Yeah, sloanfinancial.net.
sloanfinancial.net. Head on over there.
sloanfinancial.net.
Head on over there today. Angela, thanks for your time. We'll be right back.
My pleasure, and you have a Merry Christmas.
Same to you.